For 5 or 10 years, they're not taking risk. How can I go to a new bank who's not taking on any new people? It's going to cause more defaults, more foreclosures, because no bank is going to lend on brand new real estate loans. And we're just starting that cycle, because most of these were 2, 3, 4 year adjustable rates. That really starts the last half of this year all the way through 2025. It is catastrophic. It's probably $2 trillion coming.
Yeah, that I've heard. I mean, commercial real estate is the next shoe to drop, because
it's a
you
big
have a lot of these leases are going to roll off now in the next 6+ months.
Yeah.
New rates are going to set in. A lot of these leases are vacant because of people who've been more accustomed to working at home. And it's really a perfect clusterfuck of, folks having to just write down huge losses on the real estate side. And you're taking it a step further. Yeah.
The problem is the appraisal value too, Tim. The problem is that if the weakest guy sells at a lower price, well, now the next bank on the loan's got to assume that the same similar apartment complex or commercial building or office space is now at that price. So you have this perpetual downward pressure. So the bank now says your collateral is not worth what it was. Now let's talk about that in terms of oil and gas. So we know that a lot of the people that buy minerals are out there using leverage and bank financing, right? So now the bank says, do I continue to lend to oil and gas, which is the riskiest asset class out there because it's so variable, right, based on reserves and decline curves of commodity price? Or do I shrink that $100 million line of credit and say you only have 25 or 50 million, or you guys need to put another 20, 30% equity down? So instead of expanding the ability to buy minerals, it's actually shrinking, and there's going to be a lot of pressure on those current asset holders to pay down that debt, because they already look at $71 oil and say backwardation. The prices are stripped going down, not up. Gas prices are down. There's no short-term view of a high rise in gas prices between now and the end of 2023, unless we have a really bad winter prediction. So you now have pressure inside the energy space where those that have borrowed money are being looked at as saying, you need a lot more equity to pay it down, or you got to go sell into the market, which should push down prices unless you're a cash buyer, because they're going to have less buyers to buy those assets that have to be liquidated. So this is a major liquidity crisis across entrepreneurs, business owners, oil and gas companies that borrow money, and pretty much anybody in this space that is required to go get conventional lending, because they're all in a major retraction mode. We had my conference this weekend down in San Antonio. I had a bank expert come in and talk for an hour and a half. And essentially he just laid it out and said, whatever credit you have, you better lock in, get as long as you can. It's not just what the interest rate is. It's going to be if you can get the loan or keep the line of credit you have today. That's going to be more important. It's critical.
Yeah, no, talking with folks about where the opportunity set lies in minerals for the next 3 years. And I think cash buyers, ultra high net worth and family offices in particular, are extremely well positioned, because you can't stretch your dollar anymore with the debt. It's too expensive if you can get it. And you're saying you're not going to be able to get it. So, if you're buying PVP at, PV 12 to 15, which is fairly good in the market, and your debt costs 8-9%, good luck.